You're now live, so take it away.
Good. I was just about to say we should get started. So thank you guys all for joining either on the Zoom link or watching on the live feed. Today VK Realty Group is all about wanting to provide information and content whenever we can for our community. So today we're doing a two-part series, a home buyer and a seller seminar or webinar. I'm just talking about buying and selling during this unprecedented time, this pandemic, and some of the changes and things that have been going on. And with me today, I have two special guests. I have Lisa Moriello with loanDepot. She's a loan officer, been in the business for a long time, and has become a good friend who's going to be sharing some information on the lending side of things. And I have Leticia Crespo. She is an attorney, a real estate attorney who we're more recent friends, and she's becoming my go-to pretty quickly, right, in this time, because she is on it. And so we want to be able to have her on to talk about how things are being handled on the legal side of things for your real estate transactions, right? So this won't be long. I mean, we'll go till 12, but please feel free to ask questions in the chat box, ask questions in the live feed. I will try and answer as many of them. We will try and answer as many of them as we can. We'll leave some time at the end. We'll end right around 12 at the latest, right? So each of us will talk for about 10, 15 minutes and share what we can, all right? So I'll start. And again, my name is Valerie King. I am CEO of VK Realty Group at Keller Williams Realty. I'm a real estate consultant, been one for almost 10 years now. And this is an interesting time, my friends, right? And, I want to share, before I get into the home buying process and some things that for you to be aware of, I want to share some real life market stats, right? Because there's perception and then there's reality. Right now, I know a lot of people are thinking there's nothing coming on the market. Nobody wants to sell. Nobody's ready to buy right now. Everybody's stuck at home. And while I understand that perception, understand that real estate is an essential, has been deemed essential, right, in Connecticut. And so that means that we're still out as real estate professionals, still out helping clients buy and sell real estate. So what does that mean? So I'm going to share my screen with you guys and show some market stats. Okay, so if you guys can see, I put together some rough numbers in terms of, I mean, all this pretty much started at the beginning of March, and we're in May now, right? So 2 months of this. And so what's been going on since all of this started? I focused on Fairfield and New Haven County because that's our primary areas that we serve. I broke it down between single family, condos, and multifamilies, because they're two completely different, types of markets, right? So in Fairfield County, you'll see for new listings in March, right? When this all really started, new listings, we had over 1,400 new listings for single families and 77 new listings for multifamilies. In April, understandably, that number has gone down, 794 and 45 for multifamilies. Under deposits, now this is the number that we need to be watching, right? And under deposits and closed, what kind of activity is happening? In March, 1,200 of the single family and condos have gone under deposit and or closed. Now, a lot of what happened in March is carryover from before the pandemic started, right? So April and May, we'll start telling the real numbers in terms of what kind of activity we're looking at. And believe it or not, in April, that number went up in terms of under contracts and closed single families. You know, for multifamilies, that number went down to 85, but still a really strong number. And currently active in each of those categories for single family, 3,600. Now compare 3,600 single families across all of Fairfield County to, you know, April, 1,700 of them that went under deposit and closed. That's half, right? So that means that the new inventory is not keeping up with what's going under deposit and closed, right? I mean, if in 2 months, everything can be sold based on previous activity in 2 to 3 months, then as buyers, that means that the things that are coming on, there's not as many new inventory that's coming on to keep up with the demand of the buyers that are still out there looking, right? And you'll see a similar story in New Haven County. So New Haven County to the right, you've got new listings for single families at 1,100. And in March, 677 in April, multifamily is 105 and 65 in April, right? So not as many coming on. Under deposits, 1,000, just over 1,000 in March, and 1,500 in April, under deposit and closed, right? And in multifamily is 144 and 143 under deposit and closed. Now, currently active, you've only got 2,000, right? Compare that to 1,500 that closed and went under deposit, and 208 for multifamilies compared to 144. So again, the numbers are showing that there's activity and that people aren't sitting around and waiting for all of this to be over. The ones that are motivated to sell are going to need to sell. The ones that are motivated to buy are going to be out there looking to buy, because Lisa is going to talk more about what's going on the lending side of things. The rates are great, you know. So if you're out and you've got the ability to buy and you have the credit to do so, now's the time to be looking, you know, as things are coming on. Okay. So now I'm going to just talk a little bit about the home buying process, right? Because some of you guys, that's what we're here for, just understanding what to look forward to in the home buying process. So this chart that I have is one that I use for my clients in all my consultations, and it's basically the home buying process from start to finish, right? I'm not going to go through it in depth here. I do that, like I said, in my consultations, but I do want to point out some things, especially during this pandemic, that you're going to want to pay attention to. For one, making sure that you're working with an agent that can work with you during this more virtual age, right? So someone that's going to be able to do virtual tours when you can't get out there, or if you're nervous about getting out there, virtual tours on your behalf and or virtual consultations, the ability to provide access to listings, whether it be listings that you get daily via email or whether it be listings that you get via an app, right? So you're going to want to have someone who's more virtually savvy and technologically savvy during this time. And the same with the lender in the pre-approval process. And understanding that lending criteria has tightened. And so wanting to make sure that if you had a pre-approval done a month ago, you're probably going to want to have that double checked again, just to make sure you still qualify. Lisa can talk more about that. And you're going to want to make sure, you know, when you're doing your consultations and you're assessing your needs, that you are as realistic as possible. Limited inventory means limited options, right? And so if you're in a position where you need to buy, what is it in terms of how many bedrooms, bathrooms do we absolutely need during this time to so that we can move forward. And if you're a first-time home buyer, that means getting real and getting right and understanding that this may not be your last home. And so can we get something, can we find something that fits our current needs, and potentially buy up later, right? Because again, rates are great and the market is limited. So then moving on to writing offers and negotiating terms and contracts. I'm going to leave most of that to Leticia to talk about, right? Just understanding that nobody knows how to deal with COVID-19 and things that are going on. And so everyone has a different way of approaching it, whether it be signing certain agreements that Leticia can talk more about, but just understanding that each attorney and or property may be handled in a slightly different way because of concerns. You're going to, be presented with different agreements and or addendums, and you're going to want to make sure you have someone like Leticia that you may be able to refer to and say, is this something that I should be signing or not, right? When you get an offer accepted, you're going to be expected to put deposits down, and that's standard, right? But during this time, conferring with your real estate professional and your attorney and talking about how much really should I be putting down? Is there more risk, right? Typically, it's a 1% deposit, 1 to 2%, at least in Upper Fairfield and New Haven County, maybe a little bit more lower Fairfield County, right? So talking to your attorneys about what should be typical and what should be acceptable during this time for those. As you get into your contingency phase, which is when you're under contract, there are still protections, no matter what's going on, pandemic or no, that every contract has, right? And so even without any special pandemic addendums, you have contingencies that protect your deposit and allow you to be able to walk away should issues arise, right? So you still have your inspection contingency that needs to be done within the first 10 to 14 days of an accepted offer. Inspections will cost you anywhere from, $400 to $600 for single families and up to $800 maybe for multifamilies for an inspection that you absolutely need to have done. And a lot of inspectors are not going to want groups and clients present during inspection. So you may end up doing those virtually. Just understanding that may be a new standard for home inspectors. And then once you've gotten your inspection contingency underway, you've got your mortgage financing contingency, which is big now because there are people that are losing jobs in the middle of transactions. There are people that are being furloughed and or given hours that are reduced. So all those things are going to affect how you, whether or not you qualify at the end of your contingency, your mortgage contingency period. So it's an important one to make sure that you're communicating with your lender with any changes that you have going on, right? And during your mortgage contingency, you have additional funds upfront that you are going to be spending, right? So you have your appraisal, typically between $500 and $600 for single family, where they're assessing value and making sure that the property is worth what you're willing to pay for it, especially during this time. And a lot of appraisals, some lenders are accepting drive-by appraisals, right? So it's even more important to making sure that you're getting comparables and comps before you get under contract, because appraisals in some cases are not going into the house. And so, while the value is there, I mean, it may not be as accurate. And I say that with an asterisk, right? And And the other last upfront cost that you have is typically homeowners insurance, where you pay for the first year upfront. Although I will say with the title search that the attorney does, a lot of attorneys that are trying to stay ahead of the game are doing title searches early and often charging for those in advance. So that's something that Leticia could talk more about as well. But once you've gotten your contingencies cleared and you get a clear close from your mortgage company, you would be closing at the attorney's office and or anywhere else that it becomes acceptable. And Leticia could talk more about how that's kind of being adjusted as well, because a lot of with the social distancing, you may end up signing it in your front yard, and big distance. And so things look a little bit differently right now, and yet we're still able to close because of the pivots and the adjustments that people have, the professionals in the industry have been able to make. We're still closing oftentimes in 30 to 45 days for a lot of our loans, which is really good news for our buyers. So while we have these adjustments, we have these changes, the professionals have been working together, and thankfully with some things that have been passed by the state have allowed us to stay pretty much within the similar timeframes as before. So that's my abbreviated version of the home buying process. And again, I'm happy to talk more with anyone that has questions on any specific steps or how to get started in more detail. But I'm going to pass this off to Lisa, who can get more into the lending side of this. And I'm going to stop my sharing, okay?
Thanks, Valerie. Hi, as Valerie said, my name is Lisa Moriello. I'm a loan officer and a branch manager for loanDepot, and we're located in Shelton, Connecticut. I'm a licensed loan officer in 35 states. So it makes for a very interesting year for me. As Valerie said, it's busier than you think. We have closed in my region alone, which is included New York, Connecticut, Massachusetts. We've closed over 2,000 transactions just this month. And that's a combination of purchase and refinance, but it's an amazing time, and I'm astounded every day at how many contracts I'm getting in. So the main thing that you need to know right now is, prior to coming into this event, we were in a position where there was a very limited inventory and there were a lot of buyers. So that leads for a lot of fighting over properties. So what has happened is some of those buyers have taken a step back, but that's temporary. As Valerie said, we're not replenishing the listings that are being sold as quickly as we were in the beginning of the year before this pandemic started. So what that means is, as soon as we're set free and let go as to being able to go out and do open houses, and that will look different. I'll talk about that in a minute. The amount of buyers in this market is going to triple. So what does that mean for you as a home buyer? If you have the ability to look today and the comfort level, you should be looking. You should be pre-approved. Your pre-approval should be reviewed, because a lot of banks have changed their lending requirements. And you need to make sure that you are the most up to date. And then you should be out there aggressively looking, because if you think that houses are going fast now, as soon as we are let go, what's going to end up happening is you're going to have 5 times as many buyers in the market. So I want to talk a little bit about what an application looks like. loanDepot is one of the top lenders in the country. We've been going digital before it was a thing. So we were actually well suited to moving over to this environment. We did up our game a little bit. All of our applications can be done digitally. My first time home buyer interviews are done by video, just like this is. And I've had several this week already, and it works out really nicely. I find that people like doing it that way. I mean, I'm doing I'm doing consultations on the phone, 7 o'clock, 8 o'clock at night, whenever they're comfortable. And the fact that people don't have to leave their own home is a wonderful place to be. So your application starts with us digitally. We'll send you a link. You fill in a little info. I'm going to call you. We're going to have a video call. I'm going to go through the information that you gave to me and make sure it's up to date and what I need. Now, the really neat thing is a lot of times we're verifying your income electronically. So you may have less to do for us. If you do need to upload anything, we provide you with a secure upload, and you can upload right into your own file, which is a really nice thing to do. So you don't have to be faxing or emailing, whatever your comfort level is. Once your documents are in, whether you have a property or you don't, we're going to ship your loan into our underwriters. So we send it in electronically. I have about 55 clients that are already approved with mortgage commitments that don't yet have a property. So that's just to say that's who your competition is. They are out there looking around and they've already got their mortgage commitment. And that is a big deal to a seller. That makes a heck of a lot of difference to a seller as far as risk is concerned. As once the commitment is done, we're going to send you out your approval letters. We're going to finish working on your file until you find a property. Once you find a property, we're going to wait. Once Valerie tells us you're satisfied with the inspections, then we're going to move to the next step, which is the appraisal. So there are 3 versions of appraisal today. 2 are for purchase and 3 are for refinance. So the 2 that are specific to purchase are a property inspection waiver, which means that your home or the home you're purchasing has fit into a statistical box. And in that box, the value that you're claiming is supported by all the other comps that are data provided by the AVMs, the automatic valuation models. So it's a model, but frankly, it's a very conservative model. So it doesn't bother me, as Valerie said, you want to know your comps. So, well, your agent is going to be right on top of that, knowing that the house is worth what you're willing to pay for it. If that comes back with a property inspection waiver, you can be assured that your value is solid. The next step is what's called a drive-by appraisal. And a drive-by appraisal isn't what it was back in the 90s. I can say that because I was doing this back then. So a drive-by appraisal is actually an analysis. The drive-by part is actually just taking physical pictures of the property, but they're going to go in, they're going to research the MLS, they're going to research everything that's online about that property, even utilizing some of the online pictures. So it's far more detailed than any other type of drive-by that used to be, and it's done in order to make both the seller and the buyer safe. And that means nobody has to go into the property. So the last type of inspection is a full inside and outside inspection. Those are still being done. And if your loan or your property has to fit certain characteristics. So if you're cash out refinancing your property, well, yes, we still do that. A lot of banks don't do that, but we can. If you're cash out refinancing, it's likely that we're going to need to get in and out. If you are buying a multifamily house, it may be that we have to get in and out. That one's still a little hairy because if you have tenants, it does make it more difficult. And for me, I deal in a lot of states. So for instance, Vermont has been totally shut down. So if you didn't get a property inspection in Vermont, you weren't buying a house. That's how that went. Connecticut, we are a lot more open to all these different kinds, and that's a great thing. So I'm excited about that. Once your appraisal's in, we tighten up your loan. We wait for Leticia to send us your title. Once the title is in, we get your final approval and we send you to closing. Now, what happens at closing? How do we handle that? Well, if you're like me, you remember the day when everybody, sellers, buyers, real estate agents, attorneys for both partners, sat around the table and literally passed keys. So we don't do that anymore. And as Valerie said, you can close in a number of ways. we're going to automatically send you a portion of your closing documents electronically. We call those the non-essentials. The non-essentials are basically repeat documents, things you've signed before that don't have any bearing on what your interest rate is, what closing costs are, what your note rate is. These are the things that, while Leticia is really good about going through them, you've seen these before and you don't necessarily need them to go through. So it cuts your package down by half, which is a great thing. The essential documents, the obligation of the note, the deed to the property, all of those things you're going to sign and review with your attorney in a number of ways. You can do it electronically. They have remote notarization, which we end up doing. We've had what we call drive-by closings, where the attorney puts the package in the mailbox. You pick it up, you sign it. They give you a really nice pen, always brand new, and you sign, and then they pick it up and take it back for you. And we've had fully remote. It depends on the state. It depends on how the comfort level, your comfort level is primary for us. It's a great thing. It's a really interesting time. And I say that because holy cow, I've been through 6 presidents, 4 Fed directors, and 3 recessions. And this is truly one of the most interesting times in the mortgage business. And I love that where I am, because my company was doing this 2 years ago. We have been doing this type of digital application and doing our remote closing, not because we were expecting a pandemic, but because we saw the changes in who the consumer is. Today, our consumers are doing Facebook Live. They're on their phones. They're on their computers. They don't want to sit down and meet with you. They're really okay with doing a video. And yeah, they love the video because they actually do get to see you. But if they don't have to go somewhere to get everything they need done, it's far more convenient for them. So we were all about this 2 years ago, and we've stepped up our game. I'm very excited. And as I said, it's proving that we're leading the industry in technology today. And as far as the rates are concerned, because I know Valerie always likes me to talk to rates.
Yes.
Holy cow, is all I can say. These rates are amazing. You are typically seeing rates in the 3s. It's been a while since we've seen that. So you got to understand, this makes you eligible to buy a little bit more house than you might have been able to qualify for before. There have been some changes. One of the first things I do with my clients is I review their credit and make sure that their credit is in the shape it needs to be for them to buy a house. So often I'm helping them. I work with a credit analyst, and he'll take a look at things and see if he can help. It's a great place to be, and we like to get you prepared and make sure you know that when you buy this house, you're going to be financially secure and you're going to be happy to be in it. So I saw, Valerie, there was a quick question about what conventional rates are.
I was going to ask it anyways. Yes. Like, let's get some specifics for people out there. What are the rates looking like really right now for conventional and FHA mortgages? So
they are in the 3s, and that's about as detailed as I'm going to get, because interest rates are determined not only by the amount you're borrowing, but they're also determined by what your credit rating is and what type of loan you're getting. So while you're taking an FHA loan because you're putting 3.5% down, you don't take an FHA loan because if you're putting 20% down typically. And the reason behind that is because FHA has mortgage insurance during its lifetime, regardless of how much you put down. So FHA to conventional is different. Someone with a lower credit score might look at FHA because the FHA mortgage insurance is actually one price, no matter what your credit score is. If you're looking at a low down payment conventional loan, that mortgage insurance is private mortgage insurance, and private mortgage insurance is affected by your credit rating. It's affected by your credit rating. It's affected by how much you're putting down, a lot of different things. So conventional rates depend on what your loan to value is, what your credit score is, what type of loan you're taking. FHA rates, also the same thing. One of the biggest changes right now is FHA did tighten up their credit scores So if your credit score is lower than 620, you're going to be required to put 10% down. They're not going to approve the loan. There are some changes, and you will see that number all over the board. Some lenders have different overlays. An overlay is a guideline on a guideline. So for instance, HUD's guidelines come out, loanDepot writes to those guidelines. Okay. Bank ABC, HUD's guideline comes out, and Bank ABC puts a guideline on top of that guideline, meaning that they're not going to do exactly what HUD wants. They want a little bit less risk loan. So they're going to put some conditions on top of it. So you want to know who you are as a borrower. When a borrower walks in with me, if they have a down payment less than 20%, I look at 3 different things. I look at, how do they qualify for FHA? Does that give them the lowest payment? How do they qualify for a conventional loan with mortgage insurance? Does that give them a lowest payment? And then most people don't know there's a type of loan called lender paid mortgage insurance. Why do you want that? Lender paid mortgage insurance is, and mortgage insurance is still on your loan, but it's actually added into the rate. And that may make that interest deductible for you. So I have to say that very carefully. I recommend that you check with your accountant, but mortgage insurance as a whole is only a tax deduction for people when you fall into a certain income category. So you want to look at all the different options. Which one gives you the lowest payment? Which one gives you the most comfort level on the house you're buying? But my favorite thing, Valerie, is all of our clients we've sold houses to, we've financed houses for. For me, it's going back a lot of years. We're going to know immediately after this is over whether they love their house or they don't love their house.
Right.
So it's going to be a very exciting time. Guys, if you're not pre-approved, you need to get pre-approved. And if you have the ability, please be shopping now, because the competition is going to get stiff, and it's going to get stiff fast, because people want to get out of their apartments. People want to get out of the smaller homes that they might be in, that they realize their family is not suited for that. So we'd love to help you anyway. And if there's anything I can do, please don't hesitate to call me. You can Google me. I'm online. I'm right here in local. Thanks, Valerie, for having me.
Thank you. So a couple of things that I wanted to highlight from what Lisa just said, okay, to you guys. One, with FHA, you can get in with as little as 3.5% down, right?
Mhm.
With conventional, you can typically do between 3 and 5% down minimum, right?
3 and 5%. The 3% down is an income limited program. So that depends on which county you're in.
Okay. And then you were also talking about minimum credit scores. You were talking about minimum with FHA. Again, that can vary by lender, correct?
It can, 100%. So we're just getting back to, we tightened up as well a little bit, and we've just started to release those. Our minimum credit score for an FHA loan was 520. And with 520 credit score, you had to put 10% down. It has gone up a bit. I think you've got to have a reason for that. You've got to be a good loan applicant overall, and we can help with that.
Right. Some lenders have gone all the way up to 640 as a minimum
Correct.
credit for FHA.
Correct.
And up. So just be aware of that as you're shopping around for loans, that one lender may say you don't qualify, and it's because of their own restrictions and overlays in the
And if I can make a suggestion, if your credit is a question or a challenge, most of our credit card providers give us the opportunity to check our credit for free. They use it as risk abatement. Actually, it's good for them. It's free for you. When you are checking your credit on one of those services that is provided by your own credit card company, it does not look like an inquiry. What I'd like you to do today is take a look at what that number is today, and then keep an eye on it. You don't want to make any significant changes to your credit. You do not want to open new credit cards. You do not want to close old credit cards. You want to keep your balances down under 50% is good. under 30% of the line. So for instance, if you have a Home Depot card, big offender, Home Depot card, and the Home Depot card has a $10,000 balance, a $10,000 line, you should never have a balance over $3,000 on that card. So you've got to shut that down. All of that is going to be positive towards your credit. So keep an eye on those resources that you have personally that allow you to watch your credit. Those credit scores do not necessarily reflect what you're going to see on a mortgage credit score. The only thing I want you to watch is whether or not it's going to have an upward I can't say it today. It's going up. That's what we want. We want to see that it's going up, not down. Okay. If it's going down, there's a problem because it's going to be a big issue when you go to apply for your mortgage. Okay. So status quo is the best, no changes, and keep an eye on something that allows you to watch your credit without pulling your credit. If you call me and I pull your credit, that is what's called a hard pull. A hard pull doesn't necessarily affect your credit score, but if you have 27 of me doing hard pulls, it's going to affect your credit score. So significantly. So keep that in mind. Pay your bills on time. The one thing I am recommending to clients today in this environment is set up your credit cards for automatic minimum payment. It may not be the time to pay down large amounts of debt. People are feeling a little insecure. Having money in your savings account is not a bad thing right now, but set up your payments so that they're taken out automatically on a minimum. You'll never be late. And a late payment, anytime now, a late payment is going to affect your ability to buy a house.
Thank you, Lisa. That was some good information. And so I want to make sure I get to Leticia. Leticia has been sharing all these documents for those of you guys that have been paying attention in the chat box, all these different agreements and addendums that have been put in place during this time that you can download for those of you on live. I don't know if you wanted to actually share any of those, Leticia. I don't know if you're going to want to share any or all of them, but I can pull them up if you want to, or if you want to pull them up as you talk. But you know, on the legal side of things, I feel, and the title side of things have probably been the most affected, probably during this time, and how they're being handled. So, Leticia, with the Crespo Group, you take it away.
Thank you. Good morning, everybody. So my name is Leticia Crespo, and I am here with really good news, right? In terms of our side of things, we are seeing the business is booming. I don't want to say it kind of like that, but it is. We're very busy. Things are closing, clients are purchasing, people are selling, and transactions are happening. So our perspective may be a little bit different from others, only because, kind of like Lisa said and Valerie said, if you're not willing to pivot in this environment, or anytime some type of adjustment or some type of adversarial situation happens, you're not going to be able to see growth in your business. So for us, we also have been for about 5 to 6 years at this point. We are a paperless office. We do have a lot of remote capabilities. So for us, this has been pretty easy. The only thing is that there were a couple of those steps in the process that needed to be in person. So basically, every step that has been described to you by Valerie and Lisa are usually done in person. Many are in person. They are now done remotely. The same thing kind of goes for certain of the things that we have. So with respect to, let's start at the beginning. In terms of getting into your contract, just a little bit more detail, I did upload and share that contract addendum, because I think what we've as an industry have tried to do, and I can speak for myself, and I know Valerie, we've been kind of working together and being as much on the forefront as we can with information to keep our industry comfortable locally. We have shared many of the things that we've come in contact with, which mainly is just how do we protect clients from who are afraid and just generally thinking, things are shut down, things are not happening, let's just shut down and not happen. Well, that's not the case for every industry. So many of our clients are working and are in industries that are essential workers. So we are essential, and we have many clients in many industries who are still able to purchase and are probably what's really driving a lot of this force, because they have that capability, or just have that ability to pivot and make sure people can work from home. So there's business happening, and people are buying, people are selling. So what we've tried to do is just make sure that we ease those who are just kind of still on the fence about that, and making sure that they have access to the information that they need to be calm. What would that look like? That looks like making sure that when you're entering a contract, that contract has provisions to make sure that it takes into account what we're involved in. On a regular good day without COVID-19, contracts account for contingencies. We make sure you are protected as to your inspection and to your financing, and we protect that deposit. What has changed is the conversation that I have with agents and clients, saying what Lisa would tell you that you need 3.5% to, let's just go with an FHA loan. If you need 3.5% to close, that's not the same thing as what you need to just get into your contract with your seller. That deposit is just what protects you and the seller in the event you were to cancel your transaction. They don't necessarily need 3.5% to be able to do that. So right now, my advice is always try to keep that number as low as possible, so that if you are now holding the bag and want to walk away for whatever reason, let's say it is related or you just have a sudden change of heart, let's limit that and mitigate that loss to 1%. I think it's a reasonable amount of money. Again, on the other side, you could expect a lot of pushback, but it doesn't mean that's not something that we're going to try to encourage you to do. Aside from that, it also has some information on the rider, the addendum that's on there. It'll be either, if it's the beginning, will look either as an addendum or a rider, but the verbiage is still the same. And that's what matters. What matters is that it's also basically allowing you to understand that there's some delays that are going to be possibly beyond our control, because this is a real factor. One of them being if someone in that home needs to gain access to during your inspection, that they are going to be upfront and transparent about that they need to have a delay, and it may be 14 days. If they've been exposed, it's going to be a 14-day isolation period. So you have to expect that. And no one's in breach of contract because they have to take that into account, and everybody's on the same page. So it's just trying to keep the field very transparent. Again, you can't help the people who are in denial about the transactions and what it looks like. I have had some attorneys push back on that very, very hard. We don't want to change contracts. What are you doing? It's what we're doing, and they can either go with it or they don't. So far, I've been successful. I haven't seen anyone not allow for some of the verbiage. They've maybe changed some of the dates. If you were to look at it, you can take a look at that on your own, but you'll see it can say 14 days. One of them was more willing to allow for 30 days of a delay. And one of them being that we can't, pushing forward, if you are now clear to close, I am protecting that contingency date up until the day before, quite honestly. Why? Because Lisa can maybe comment a little bit later, but they're pulling and checking your employment status the same day or that day of. I've had a closing package with a lender holding back a package and money until they called that very morning to make sure the client has it. And in a closing package, there's what's called an attestation that says, I still have my job as of that morning. So that's normally there, but it's a little bit more prominent right now. They've kind of pulled it out into an individual page. So those are the things that are kind of happening along the way in terms of the contract. Usually most people don't come to us first. We are usually like the last resort, like you get your attorney last. They're working with a realtor, working with a loan officer, and people usually come to us last. And so when you do finally get to that point, let's say you've advanced through your whole entire process and now your agent is like you need to pick an attorney. What you're going to want to look like basically you're starting to reach out to whomever you choose to, but you want to be realistic about what those fees are going to look like. Unfortunately, I have come across several closing statements recently where there seems to be a very big surge in their fees. Attorney fees are a lot higher than what I'm accustomed to seeing. Their attorney fees I'm seeing as $1,200 and $1,500, which is just for their fee alone. That's not customary. That, in my opinion, that is a little bit of a gouge right now, knowing that there's some of the attorneys are just not working. They are older. They don't want people in their office, and they're afraid. And I understand that. So that kind of, or if they are, it's like, I'm coming out. You're going to pay because I came out. A little bit of more of a premium on that. Which I don't think is realistic. Our fees are up there. I say this is for right now, this session is for buyers. So our fee agreement is posted there. This is what it's been for probably far too long, but it is what it is. It hasn't changed. The only factor when you do take a look at it, you'll see that there is a number that does change, and that is dependent upon your title insurance. So I did provide what it looked like a sample quote, kind of like a middle number. And that quote is at $150,000 purchase price. When you get your loan estimate from your loan officer, like Lisa, she'll have disclosed this number. And once you nail that number down to be very specific to the loan, the purchase price and the loan amount, it will change. But that's so somewhere in the middle, and what you could expect is that it'll go up from there or it'll go down from there. Okay. So that's pretty much what that looks like. Now, getting to the actual closing table. So things have changed in Connecticut. We cannot do what they technically is a technical term is remote online or remote notarization, remote electronic notarization. Connecticut is allowed to do what is called remote notarization, right? That's all we can do. And what does that really mean? What that means is that we receive a closing package, and right now our office, we've set up 2 separate spaces so that people can come as far as the lobby. Our lobby has a glass door in between, and we can kind of speak through that with your phone where we can watch you signing, because what it is, you have to have a wet signature, which means ink. You have to sign with ink. If there were other states, right now there's some towns will accept it, but it just depends on which one. But that would be just completely electronic. Right now, for this option where we have to record it with some type of a piece of technology, Zoom, WhatsApp, basically FaceTime. So we have that capability at this point where our clients some of them don't want to come into the office, which is very fair. And some of that, so my partner, I have another attorney who works with me. She'll go, she does all the in-person signings. Sometimes it's at their house, sometimes it's in a parking lot. So again, like they said, it's kind of wherever and whatever works right now. Technically, for the remote notarization that we're doing, they have to be physically in Connecticut, because we have to ask that question. So if you're thinking about being a person who's in New York and don't want to come all the way, well, you have to get to the border, you have to cross and literally affirm you are in the state of Connecticut. That'll work. Get the first exit and be here. And then you can if you want to drop it off in person, you can FedEx it to us. We're very flexible in terms of what has to happen in order to get it closed. I think if you're dealing with people who are just literally stuck in their ways, then you're going to see a lot of opposition. So my report is very good, right? I said I come with a great report about the industry, about what's happening, but that is also because we are willing to pivot, to innovate, and to make a lot of changes in how we do business. So that's pretty much what I have to offer at this point. So, you know, we're like I said, it's happening. One other thing about title searches. People always have that question about what is that going to look like? Can we do that? So thankfully, every city and town in the state of Connecticut can do title searches right now. A lot of them they've pivoted. They've gone on to doing a lot of online. Some of towns that were not releasing their index and indices online are doing so right now. Some of it's a little bit more expensive. So yeah, title searches kind of a little bit more expensive depending on if you have someone who's tech savvy and who's willing to, you know, if you want to accept certain documents in a different format. But nevertheless, they're getting done. What is a little bit more limited is the ability to do municipal searches. So not all departments are available, but that is not something that is necessarily a requirement from your lender.
What
So
does
the
a municipal search mean,
So
Leticia?
a municipal search, basically, let's just explain what the title search is. The title search, it basically explains what who is the owner, what is on the land records, meaning if there's liens, back taxes, mortgages, that's where we find out who owns and what is on title. Municipal search is completely separate and is not needed by the lender, but it basically reviews multiple departments. It reviews the inlands and wetlands, fire marshal, building, zoning. It
Right.
goes through each of those departments and it asks, are there any known violations and what other, depending on the department, but are there any open permits on these properties?
Correct.
So that can't really happen right now, but we have an answer for that. The answer to that is your title insurance. Your title insurance has, well, the ones that if you're not going to work with me, our office strictly offers equal owner policies. That is a policy that is an enhanced policy that covers for not only survey coverage, but it also covers for any municipal violations or things that have to be remediated because of some type of exactly what you couldn't find out in terms of, let's just say a deck. Let's go with a deck. That was the good example during how another presentation I did. You go through you have a deck on the property. It's 5 feet too big near the setback of the town or the property line, and you've got to cut that back. Well, you didn't know about it, and it's actually affirmed that no one knew that it was there from a prior owner. They didn't realize they had to get a permit. It has to come out. Well, your title insurance claim has to be submitted, and they have to deal with that. So because we don't have the ability to do all of this, this is the time where these have been always available. We've always encouraged them more because of survey coverage, the boundary lines, where that's always been an issue. The fence is too far, my tree is too far, things like that. But now this one has kind of come back up and said, hey, I'm here, and I'm really, really useful. So many of my clients, I mean, obviously we still do the due diligence that we can. Sometimes I know with Bridgeport, my title searcher has been able to basically still be able to have access to some of the building information, which right now, really, that's the most for a lot of my clients, that's very critical, whether there's an open permit. But even if that open permit is there, there's a statute that allows it to expire in 9 years if it hasn't been done. So if you're going to be there for a while, it's going to close on its own. Plus you have the eagle owner coverage. So I think we've covered pretty much everything available. Towns are able to record. We have innovated that as well. So from start to finish, we can get it done.
So Valerie, Leticia and I have worked a lot together in the past, and she's amazing, and everything she said is spot on. The municipals they are a comeback. I mean, they're required in New York, and they can affect a person's ability to reconstruct something, to put on an addition later on down the line, just the way things are going.
Right.
You have to be able to know that everything's been done up to code. Leticia, the one question, and it's really nice to see you, by the way. The one thing I would ask you is, so our standard is on a purchase transaction, we're going to have a conditional commitment for our borrower. We're also going to have our whatever valuation we need, whether it be a full appraisal or anything else. And we're ordering title up front. When is the right time for your clients to do this? And how long is a good setup for ordering the title in the municipals?
Okay, so what our office is one of those offices that Valerie mentioned. We do, once we engage with our clients, it's in our fee agreement, we do collect. It's the one fee that we accept upfront. We collect $360. We are able, in our email, when we send our fee agreement, it's there to be able to pay by Zelle, by Venmo, or a credit card. We have a Square account. You can make the payment that way, however you want, but we do require that upfront. What we do is we hang on to that until they get past the inspection and the appraisal. Once you're done with your appraisal, then we ask the client whether or not they want us to move forward with that if they feel comfortable enough. But that's usually the marker where we make the move. Unfortunately, sometimes factors come in where they'll say, well, I'm having a little bit of issue with this. I think I want you to hold on. So I will always double check, but I hold on to that point and then I move forward. I don't want to start chasing them when you've issued, have it appraised, and then start saying, I need you to get that fee in, and I'd rather collect it up front. That's the term. I have it. Once I get the green light, I can just move. And my title searcher is amazing. I mean, I could have had him on here for you and ask whatever questions you have as well, but he's awesome. And he is just so fast. Like, he's emailing me right now. I don't know what he's doing, but he is. Like, he's working right now. So like, his turnaround time is amazing. Like, I would say for one, he did it in a day, because everything's online, because he doesn't have to go down there. It's just amazing. So his turnaround time, if anything, is faster. So I usually give him 4 days, but he's getting them back in like 2. So that's the turnaround time, and that's what triggers us to go ahead and make that request.
That was a good question. Thank you. Thank you, Lisa, and thank you, Leticia. I know we're heading into the end of the hour at this point, but I've been keeping an eye on any other questions that I think you ladies mostly answered at this point. There were several documents that Leticia shared in the chat box. If you guys didn't see it, you can download. Those of you that are watching live, if you would like copies of those with Leticia's permission, I can send those to you. Just send me a private message and I can forward those over to you, or you can send me an email at vking@kw.com and I'll get those over to you from Leticia, okay? If there's any final questions, please feel free to put it in the chat box and or Facebook Live. Otherwise, you guys can access me via email, like I said, phone. My number is 203-449-9846.
Why don't you 3 ladies put your contact info in the chat box?
Just about to say, Leticia and Lisa, if you can just type in your contact information in the chat box for everybody. And
Okay.
Anybody else who would like it through Facebook Live, please feel free to reach out again, and I'm happy to share. Again, these ladies are wonderful and a wealth of information for the process, especially during this time. So give them a minute.
I have a quick question from Facebook Live asking if anyone can provide information about the CHFA loan process.
That would be me. And yes, but it's the CHFA loan process is a loan process. It's a little more detailed than most, and I would recommend they shoot me an email or give me a call, and I'll be happy to do that for them. It is an income limited program, so there are only a certain number of people who are actually qualified for that, and that, I'm sorry, I lost you. That had been one of the programs that has gone through some changes. So give me a call back or just email me, and I'll be happy to let you know what the qualifications are and what you need to do.
What I will say is that there are lenders that are not doing CHFA that was doing CHFA before COVID-19 because of the restrictions that have been put in place specifically by CHFA. And so
the issue is whether or not the down payment, the additional down payments are going to continue to be available, and whether CHFA's, in bottom line, it's about what happens after the CHFA loan is closed. That's affecting a lot of local lenders. It's not about whether or not we should be doing them now, but almost everyone had to take a step back from CHFA for the foreseeable time. But there's a lot of other programs out there, and frankly, interest rates on conventional loans are about the same. So there's a lot of ways to get to the place that you need to be at.
So we're going to respect everyone's time. And again, if you have more questions, you feel free to reach out, and we'll make sure that you're connected to myself, Lisa, or Leticia, so that you can either start or get going with the loan and the purchase process. All right. So I hope you guys felt like you got some good information during this time. It's really good to see some of you guys on here. And we appreciate all that you do and look forward to helping you in your future purchase process. All right.
Valerie, thanks so
All
much
right.
for doing this.
You guys. Thank you, Lisa. Thank you, Leticia.
Thank
And
you
thank
so
you
much.
guys. Have a great weekend. All right.
You as
Take
well.
care.
Thank you.